Hey everybody, and great news because benchmark prices are up for detached, semis, and townhomes in Calgary from January to February of this year. This is the first time that we've seen a price increase in over 12 months, and it is a very welcomed change. Now, this is only 1 month of data, but this starts to make me optimistic that we are reaching the bottom in the Calgary market, especially as we head into the historically strong spring market. Total residential sales in February saw an 11% year-over-year decline, with about 1,500 units selling. While this is a double-digit drop in sales, and it might sound alarming, it's important to contextualize this because the market is still coming off of record highs, and it's really now settling into a pace that's more aligned with long-term seasonal norms in the Calgary market. Overall, Calgary's real estate market does continue to be in balanced market territory, with just the condo segment that is continuing to lag. The big story for investors is inventory. Total housing inventory grew to over 4,800 units. This is about a 16% increase compared to last February. And the surge in supply is being driven largely by record high housing completions from 2025. It was an absolute record year. And this is giving buyers options that they've lacked for years and is continuing to put downward pressure on prices and rents. And here is how it is all affecting the market. Ultimately, there's more competition. Overall, with 3.6 months of supply and over 5 months in the condo segment, buyers have the power right now to negotiate on price and to include typical conditions. If you're selling a condo, you need to be priced for today's market, not 2025 or 2024. There is significant rental competition because a significant portion of that new supply that is entering the market is purpose-built rentals. This is slowing rental growth and increasing vacancy rates slightly. 2026 is going to be another year of record housing supply deliveries, but this is going to drop off an absolute cliff into 2027, returning to more historic levels. And there's the spring reset. We're seeing a typical seasonal surge in new listings. And while demand has cooled due to easing migration, higher interest rates, economic uncertainty, interest rate fatigue, Calgary's economic fundamentals remain stronger and more affordable than most of the rest of the country, especially Toronto and Vancouver. Calgary is no longer the Wild West market, though, where any property sells in 24 hours, and it hasn't been for a while. But the transition to about 4.5 months of supply in the condo sector and a 55% sales to new listings ratio for townhomes signals that it's returning to a much more healthy, predictable market. For anyone looking to invest, now is an incredible time to buy. I have 2-bedroom units from the mid-200s that are available, if you can believe that. These units cash flow at today's rental rates and today's mortgage rates, and I think they are unbeatable long-term investments. Hey, if you've enjoyed this video so far, I have a favor to ask. Please like it and subscribe to my channel. It really helps me out. But now, let's take a look at the detailed February 2026 market stats. So taking a look at the condos first, sales did jump from January's levels, reaching 345 units, but this was still well below previous years. New listings actually dropped to 753, but a high level of units is still available. The sales to new listings ratio increased to 45%, but it's the lowest across all other property types, indicating that buyers currently have the most leverage in the condo segment. Inventory went up to 580 units, and it's the highest February level that we have seen in years, offering massive choice for condo buyers. The months of supply, thankfully, did drop down to 4.6 months of supply. And the condo market is the closest to becoming a buyer's market in Calgary, and in some areas, it's already there. For days on market, units are taking 45 days to sell. This is the longest duration of all segments, but it's down from the January highs. And benchmark prices. These did remain relatively stable month over month, down about $298,000, and condos were the only market segment that did not see prices go up between January and February of this year. Hopefully, that trend will change in the spring market. And now for townhomes. Demand for townhomes did pick up in February, and we saw sales increase to 270 units. While this was an increase, it is below the last couple of years that we've seen. New listings are at 491, and supply is tracking closely with the 5-year average of this time, kind of in the middle. Sales to new listings jumped to 55%, which is up significantly from January's 36%, signaling that there is a rapid absorption of the new supply that's coming to market. Inventory is at 887 units, which is higher than the last 4 years, and it might continue to build throughout the spring like we've seen in other years. Months of supply did tighten from 4.2 down to 3.3 months, which is actually a balanced market for buyers and sellers. The days on market is now taking 44 days for properties to move, indicating a steady but not a frantic pace of trade. And for benchmark prices, prices hit $424,000, which was up slightly month over month. Let's hope this trend continues. And now for the detached market. Sales rose to 736 units, which is showing a healthy bounce back from January's seasonal low, but this is still well below the previous years that we saw. New listings are at 1,269 units. New supply is entering the market at a faster rate than 2024 and 2025. In sales to new listings, the ratio is up at 58%, which does suggest a balanced market. It is leaning slightly toward sellers, but far from the frenzy that we saw of previous years. Inventory did climb, sitting at about 1,940 units, giving buyers more choice than they had in February since about 2022. Months of supply was sitting at 2.6. So this market is no longer critically undersupplied that we saw in the last couple of years, and it is moving toward a more sustainable equilibrium. This is what a healthy market looks like. Days on market is down to 35 days, which is a significant drop from January's 48 days, indicating that demand for houses does remain strong. And the benchmark price, similar to townhomes, it stayed very resilient at about $437,000, and it did increase modestly from last month. So that is your Calgary real estate market update for February of 2026. If you need any help buying, selling, investing, or just closing on a pre-construction property in Calgary that you have coming up, please get in touch, and I would love to help and guide you through that process. Thank you so much for watching. Bye for now.